Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to get you up to speed on what went down in the markets yesterday. So let's jump right in. It was another good day for U.S. stocks on Thursday, as investors weighed fresh inflation and labor data. The Standard & Poor's 500 rose 0.7%, marking its fourth straight winning session. The Nasdaq jumped around 1%, with tech stocks leading the charge, while the Dow Jones Industrial Average edged up nearly 0.6%. Now, things started off kind of flat, but as the day went on, enthusiasm for tech stocks picked up, pushing the markets firmly into green territory. The big focus? Expectations are running high that the Fed is leaning toward a quarter-point rate cut next week, rather than the bigger half-point cut that some were speculating about earlier. We got some key inflation data that reinforced this. The August Producer Price Index, which gives us a sense of wholesale price trends, showed a 0.2% increase month over month. It's a little higher than economists had forecast, but not enough to set off alarms. On an annual basis, PPI was up 1.7%, which matched expectations, while July's numbers were actually revised lower. All in all, this points to inflation pressures cooling down gradually. And it wasn't just inflation in focus. We also got some data on the labor front. Initial jobless claims were up more than expected last week, climbing to 230,000, 2,000 more than the prior week. Traders took this as another sign that the Fed will opt for a smaller 25 basis point cut, with the odds of that happening now sitting at 87%, up from just 50% earlier in the week. Now, on the corporate side, there was some drama with Moderna. Their shares took a 12% nosedive after the company slashed its revenue outlook for 2025 and announced it's cutting its research and development budget. That definitely caught investors off guard. So, that's your quick market update for today. Thanks for tuning in to Capital Markets Quickie with me, Endrit Sella. Don't forget to check back tomorrow for your next dose of market moves. See you then.